Welcome to Profit and Prosper, a podcast for entrepreneurs who are ready to make some money while doing what they love. On this podcast, we're going to pull back the curtain and talk about all things business and money. But I promise you, this is not your typical boring numbers talk. I'm your host, Sarah Young, a CPA and CFO with over a decade of experience in finance, business, and leadership. I'm going to share everything I've learned from helping my clients grow more profitable businesses and keep more of what they earn while growing my own successful business along the way. You'll feel empowered and confident that you too can grow your wealth, live a rich life, and have an impact. Stick with me and you might even start to think that finance is fun. Let's dive in. Welcome back to the Profit and Prosper podcast. This week's episode is going to be a special episode because today, here in my little office studio, I am joined by the one and the only Mr. Young. Mr. Young, thank you for being here.
Sure, thank you.
And Mr. Young, for those of you who haven't made the connection, Mr. Young is Brandon, my husband. And what we're going to talk about in this episode, and probably next week's episode, I feel like we have so much to say that it'll probably carry over into 2 episodes. What we're going to talk about is the business that we recently bought and are in the process of integrating. So we're just going to talk through the whole process from start to finish and all of our decision making and what it's been like and some of the things you may not know about buying a business, so that if it's something you're interested in, or maybe even if you're thinking about selling your business one day, you can hear from prospective buyers, people like us, what we're looking for. And so you can help start positioning your business to sell one day. So before we jump in, first, Brandon, tell us about your background and give us like the short version. Don't go into every single detail. He's done a lot.
Yeah, thanks. So quick introduction for me, 42, married to you, my wife, Sarah. We have a 3.5-year-old, Jackson. I'm a Marine veteran and went to school after I got out of the military. I worked in finance, real estate, private equity, and then into data and analytics. And I've been doing my own consulting work for the past few years. You know, of course, being married to you, we talk about all things business, entrepreneurship, and in this case, acquisitions, which I have an acquisitions background, investments background. And so I think it was, helpful in this scenario.
So Brandon has done a lot, as you can hear. He did the very condensed version, but he definitely has a financial background. He's not an accounting nerd like me, but he has a background his background helps him understand like some of the number stuff and the business stuff in a way that I think, a lot of spouses maybe couldn't understand, which I'm of course grateful for. Brandon, in your family, you have entrepreneurs in your family. It's something that I don't have. Before we talk about the business acquisition, I want to talk about that really quickly, like that impact on you, because I think, and I've said this, we've both said this, I wouldn't have started my business had you not been there saying like, yes, go do your thing. I think a lot of spouses probably wouldn't have said, yeah, Sarah, drop your $200K plus corporate salary and with all the benefits and all that and, go full time in this business. Like a lot of partners probably would not have been nearly as supportive. So tell me a little bit about like your family's background in entrepreneurship and how that has impacted your goals today.
Sure. So my grandfather, he was a business owner. He owned a roofing company that did large contracts with the government. And my parents were divorced. And so my grandfather was a pretty significant figure for me growing up. And certainly saw the success that he had financially. And I got exposure to that from a young age instead of, someone going to work every day. Of course, he was in the 60s by the time I was of age to remember a lot of this stuff. And starting to tail off in terms of retirement. But, he had investments, he had real estate, his business. And I think while he didn't explicitly teach me about running a business, I think I just saw the lifestyle that he had and what he had built on his own, having like essentially no education. And then my aunt, she owned her own business. She was an entrepreneur, built a design like clothing brand. And had her own business. And then, of course, Wendell, my stepdad, he owned a large lawn care landscaping company that had about 200 people, 200 employees. And so I was just around this stuff from, on a regular basis. And, I just saw these other people having success, financial success. And I just realized that if I wanted to have that same level of success myself, that I'd likely need to be a business owner. So that's been my focus. I've had several of my own businesses that I've tried to start in the past that didn't go as well as yours has. But I've learned every time you go through something like that, you learn. And I think you caught me at a point when you were ready to start your business, or, were considering it. You and I had already been through that together. I already had a lot of those discussions. And so I was able to, I think, transfer a lot of that knowledge, that history that I had with it to you. And, I was very open to it as a spouse for you to pursue your own thing. And, I had 100% faith in you. I know how good you are and what you're capable of. And I had no reservations in terms of putting my full support behind you. And, here we are.
Here we are. Yeah, it was a long time ago. I remember standing in the kitchen and we were talking about the accountant we used that 1 year after we got married to do our tax return. And I remember saying I bet she's making as much money or more.
Yeah,
as
she was
me.
terrible. Absolutely terrible. And she didn't respond. I think we got an invoice 1 year for like 9 months after the taxes were filed, and no communications, like a black hole.
Yeah.
And yeah, absolutely. She was making more than you in your corporate job, and she was running some business and doing a pretty poor job at it.
Yeah. And I remember saying I could do that. I could do at least as good of a job as they were. Because I remember finding stuff on the tax return, they were missing things. Anyways, I didn't want to go down that rabbit hole. But I guess the point I'm trying to make is you just have a different background, a different viewpoint than me. When we go to holiday functions, your family's very into listening to what's going on in my business. They just think differently. I mean, your sister has a business.
Yeah.
Your brother-in-law has
That's
a
true, yeah.
business. The number of entrepreneurs in your family is kind of insane. When you think, compared to mine, and that's not necessarily good or bad. It's just different. But when I go to my family's holidays, they're not asking me as many questions about what's going on with your business. And they just don't get it. I think it just takes it's a different level of way to live life and make money entirely. And so I think that was definitely crucial in me doing my own thing.
Yeah. Well, I think it's sort of like the Matrix, right? Like everyone is in the Matrix. You start to get socialized into this, world that we live in that really promotes, education, getting a high-paying W-2 job, and saving for retirement. And I think once you can see beyond that and realize that you're in the Matrix, you look at things a little bit differently. And I think you can look at all these different individual factors, but I think it's your perspective that changes when you start to understand the game that's being played. And, you're either part of someone else's acquisition, most likely, or someone else's company that they've started, and you're growing that for them, but you're a cog in the wheel, or you're the one leading the business, growing the business, hiring the employee. And once you start to understand how that works, that you're brought up into this process that you're sort of indoctrinated into, once you realize that there's another way to look at things, I think you can't go back. And that's something I've learned. You just can't put yourself back in there. Mm-mm. And it is a forever change.
No, I say this. I've said this in a lot of my content. You couldn't pay me enough to go back, even if they paid me $1 million a year, which is more than what I'm currently netting right now, at least for right now. You couldn't pay me enough. I just wouldn't. I wouldn't do it. Because of that. And I mean, I've said before, one of the things I'm the most proud of for my business is that it was stable enough that you almost, was it a year and a half ago, left your corporate job, and we've not looked back. And now, that gave you the time and the capacity to help with do 85% of the work on the acquisition.
Yeah.
Let's transition. Let's talk about the origin story, I think, of us buying a business. Before we talk about this one we bought, quickly, we have tried to buy 3 other businesses. We've started down the path, submitted letters of intent, and just didn't close on them for one reason or the other. A lot of the case of 2 of the 3, the bank was giving us a really hard time about cash flow. And we'll talk about the process of the loan and what they were looking for. But For two of them, the bank was giving us a hard time about the cash flow. And at the time, my business was so young. I think when we were doing these, I had just quit my full-time job. So I didn't have a ton of business income to show on my tax returns. And so I was losing our biggest source of income, which was my W-2 salary. And the businesses we're buying were low cash flow, which is why we bought them, because we wanted an opportunity to turn it around. But the bank, of course, doesn't view it that way. So two of them just didn't work out for that reason. We actually tried an accounting firm. And I remember saying, like, in this case, I felt like I didn't have the systems in place to be able to absorb it. Like I was going to be taking on their systems versus bringing the acquisition into my systems. Because again, this was like in 2020 and I just didn't have the processes that I have now. So I think my business being much more mature now has definitely played like a huge role in us being able to buy this.
Yeah, you essentially built the platform. So from a private equity perspective, you can either buy the platform, meaning you go and buy a business, a small business, and then you add on to it through other acquisitions, organic growth, other verticals, et cetera. But you essentially built it up. You built the business organically to a point where, from a banking perspective, we had enough global cash flow. So cash flow in the business and then cash flow globally, our personal finances and the business finances to support an acquisition.
Yeah. So again, we'll talk about this later when we talk about the bank financing process and what a pain in the ass that was. But it's something to think about if you're thinking about buying a business. You've got to make sure the cash flow works overall.
Yeah, and banks only care about tax returns for some stupid reason.
They don't care about projections.
You could make you could be making $100,000 a month in profit, but if your tax return, like the last 2 years, doesn't show a healthy profit enough to cover the debt service, like
they don't care.
They don't care.
Nope, they don't care. It's so weird.
It's just stupid. So I don't know. We can get into that, but
anyways, we tried before at least 3 times. The third one was they had legal issues, and you ended up not.
Oh yeah,
you forgot.
I forgot about the online business. Yeah.
So I'm actually going to start in, I think it was February. You and I were sitting, and tell me if you remember this. We were sitting at the kitchen table. I think it was at breakfast, and I had not hired my tax manager yet, and I was stressing because it was tax season. I was working more hours than I normally did, and we just sort of did the math sitting there at the kitchen table. Like we have in, net worth, if we sold everything off that we owned, like we would have $1 million in cash, and it would give us enough freedom to go, like you could go live on that somewhere. And I remember like at the time, when I realized that, it sort of flipped a switch in my head of like, oh, so I'm choosing. This was a conversation we had. You're looking at me like you maybe don't remember, but I remember. I'm choosing what I'm showing up and doing every day. And when I had that switch flipped in my head, it really has changed a lot of the things that I've done this year.
I think so. I think a lot of people are in the grind every day. And of course, you have the financial piece, right? But I think what that financial piece allows you is that once you reach a certain point, you don't have to keep your head down and just be part of the daily grind, right? You can take a pause and pull your head up and look around and say, hey, what do I really want to focus on? What are the key priorities that I have? What are the key goals that I have for myself, for my family? And have the ability to be patient about putting those things to work, like over a long period of time, versus just trying to pay the rent or whatever.
Yeah. Yeah, I mean, that was the thing. It was like, well, I could go and sell my business now and just walk away and be fine. Like we'd have to move somewhere cheaper, certainly. Yeah. But like it could be done. People live on $40,000 a year. Like this is not something that is like out of unheard of. And so I remember you said to me, like, you are choosing to do this now. Like you are. And so I listened. I had to get through tax season first. And then in May, I went on my retreat, and then we went on vacation to Naples, Florida. And we were literally walking around. Naples, Florida, if you guys haven't been there, is a very, very wealthy, affluent area. Like you're walking down the street in Naples, Florida, and there's just like Lamborghinis and Bugattis and I don't even know, all the car brands. Like just these rich, rich people running around like all over the place. And then you and I went on a lunch date one day. Actually, you tell the story.
Yeah, I think we were walking around and there was this one house on the beach. It was listed for sale. So we looked it up. It was like $60 or $70 million. Yeah,
80.
Something like that. And it just makes you think, right, a lot bigger once you know what's out there. And so, yeah, I think you always have to be expanding your thinking, because a lot of times the same, I don't know, if you have got a goal, right, a lot of times it's the same amount of effort to do the small goal and or the larger goal that's sort of 5 or 10x that. And so, if you think small, depending on where you live or how are you brought up, and you may have a certain way of thinking. And so I think it's healthy to get outside of your bubble there, outside your environment, to see what else is out there, to see what's possible.
Yeah. We just realized, we looked around and we are sitting there eating lunch. Like, there's just so many of these insanely wealthy people here. And I think I said, like, they're not smarter than us.
Right.
Like, I'm convinced, like, there are very few couples out there in the world who have more intelligence than the two of us combined, honestly.
Yeah, I
and
agree.
work ethic. I truly believe that, and not to toot our own horns, but it's just, I don't know, it's just what I think. So we realize, like, they're not smarter than us. They may have been, we're probably born to different families and all of those things that definitely changed their trajectory in life than us. But in terms of our capacity to create something, like, they're no more special than the two of us. And so we sort of brought up the idea, like, we've been thinking about, we've had buying a business or buying real estate on the table for a while and never pulled the trigger on anything because we just didn't feel ready yet. But then we kind of got home from that vacation and we're like, well, maybe we are ready. Like, what's stopping us? Why can't we just do the thing? So you started looking. First, we were looking for, like, the sort of boring type businesses, but then one day I went for a walk, and I do not remember what triggered me when I was walking out for a walk, but I came back and I came up to your office and I was like, why don't we just buy an accounting firm? And you're like, okay.
Yeah. Well, I can take orders, right? Like, if you put me on a mission, former military, former Marine, like, I can go. I know what to do and I'll go and do it. So, yeah, it was your idea I think you were a little bit reluctant at the beginning to acquire a more traditional accounting firm, just doing like tax return prep and bookkeeping and that sort of thing. But then I think you saw the opportunity, a lot of people that you're turning away, a lot of good clients on the lower tier in terms of the services that you offer, just accounting and books. Like, there's just a lot of those people that you're turning away.
Mm-hmm.
And I think once you get to a certain team size, right, you can start to build the processes and put the resources together to do that, so that you're not having to do the debits and credits every day.
Yeah.
So
I think part of it, there's definitely an opportunity. I wrote down a few reasons why we specifically bought this business or started looking for an accounting firm, but there's definitely an opportunity for this. And that the number of CPAs in general is declining. People aren't getting the licensure anymore for various reasons. The population of CPAs, just today I texted you a screenshot. There was an infographic in the CPA newsletter I get from the North Carolina CPA board, and 31% of all North Carolina CPAs are less than 40, which means that 69% are 40 and up.
yeah, and I think I saw a while back where the median age of a CPA was like 63 or so.
Yeah.
And the baby boomers, a lot of these CPAs are baby boomers, and they're in their 60s and 70s, and they're getting ready to retire. And like you said, there's not a lot of people coming behind them to fill in, to fill the gap. So I like that headwind, or that tailwind rather, for our business, over the next 5 to 10 years.
There's other industries certainly where the age is a factor, but specifically for the accounting industry, I felt like my background obviously like lends very well to buying one and running it successfully. I think that was a big factor when I just sort of was like, I'm still, to be clear, I'm not a huge fan of tax prep and bookkeeping stuff. I call it compliance work, check the box type support. But I also recognize that I think this was a shift that I had to make too, is realizing like my business is at the point where it's not just about me anymore and what I want. It's about the business and like, where's the opportunity for the business? So I've been sort of pulling myself out. And so it's less about like Sarah's thing that she's doing and more about like, okay, we've now created an actual business. And so we're going to run this. So I definitely see a need. Personally, I still think the CFO services are where it's at. And so we're going to keep focusing on growing that. But, it enables us to like open up a little bit more. So I just saw an opportunity there. really, like, we can dominate the market if we wanted to, I believe, in the next, like, 10 years or so, like, I think so. I think we could grow to a place and just be, like, a huge firm if we decide to go that route, which actually lends me well into our overall goals. Before we talk about the business, we want to talk about, like, Brandon, what is your goal? Like, what is your vision? Like, what are you trying to accomplish?
Gotcha. Well, we both read Think and Grow Rich, which is a book. You should read it if you've not read it before, if you're listening to this. And so you and I are aligned on what our vision is for the most part. And so personally, what my vision is, it's like literally in the bathroom, written down, is by September 2026, I want for you and I to earn $1 million after tax and to have a net worth of $6 million.
It's on the mirror in the bathroom.
Yeah.
not
So I
like
brush
in
my
the
teeth. You have to
toilet.
read it twice a day, basically in the morning and then in the evening. And so that enters your subconscious. And then every day that's in your head. And you try to, do things that are consistent with reaching that goal. So that's for me personally. And to do that, I'm helping drive revenue for Young & Co., revenue growth, and then also helping with other aspects of the business. So it has, M&A, mergers and acquisitions, marketing, sales. And then, my goal is to bring you just such a deluge of clients that you can staff up and we can start to grow this business and generate the cash flow we need to achieve that goal. And so one of the things that I like about you and I working together, right? Because initially it was like, okay, Brandon's going to help with the acquisition, and then maybe I'm doing my own thing still, and then you're doing this. But I think as this acquisition played out, we sort of came together and realized that we need to work together to achieve that goal and not necessarily be separate in that regard.
Yeah, pulling in the same direction.
Yeah,
I think
pulling in the
we'll
same
get there.
direction. Yeah. I mean, business is hard enough, right? I think you got to figure out how to work together without killing each other, right? If you're married, especially if you're married. But I think you and I struck the right balance in terms of like M&A, revenue generation, and operations. And so, yeah, I think we were able to do it because of that.
It's definitely, I mean, it's been an adjustment, but probably not a huge adjustment because you and I already talk about everything anyways. And so we're not really doing anything different than we would have been, except now you're helping with, I mean, you did a lot of the back end work on the acquisition stuff, but now you're helping with, sales, which at this point, honestly, for me as CEO, like networking and handling referrals and all of that, it's like, it's getting to the point where I can't do it anymore.
Yep.
And I also am, to be clear, trying to pull myself out of some sales calls because we're at the point where I cannot personally work with every single client anymore. And I find when I'm the one doing the sales call, they have that expectation that they're going to work primarily with me. And I'm like, hey, I've got an amazing team. They're going to help you. I'm here to answer questions, but like I can't personally help everybody anymore, which is a huge shift. And so having you be the person to start doing some of those things when I needed to take those off my plate has made me feel more comfortable, I think, than trying to find some new person like coming into the business brand new and trying to handle this.
First thing I'll say is a lot of these sales calls, they end up being sort of brain drains. They want to pick your brain. I've got the CPA on the line. I'm going to ask them all the questions I have and get those in
for free
in this 30-minute call. And so I think we get to avoid that for the most part by doing it this way. And then also you've got someone whose sole focus is on growing the business, right? And so I think historically you've built up the business organically, and now we can do acquisitions. We can, hire Kathy to do the inbound marketing and social media and communications, start to build that engine, and then create that funnel coming in. And then I think we have opportunities to pursue like other demographics. So I'm a veteran. I want to go and work with other veterans and who own businesses. And I think, like I said, I think you've built this platform, this foundation that we can now launch from.
Okay, so we talked about why we bought. I'm going down my list of things I wanted to cover.
Oh, I will say that currently our run right now is about 1.2 million. And so to reach that, it's going to be roughly about a $4.5 million in revenue goal. Like we have to do a lot from here to get there.
Yeah. And sometimes you need to take your own medicine. And I will tell my clients every day, like, I'm going to push you to think bigger. I want you to think outside the box. I want you to just sort of do different things. And sometimes I have to have other people tell me to do the same thing. And so, mapping out like, well, instead of doing the next milestone, which would be from 100K a month in revenue to what is that a year? You just said 1.2. I can't do math live on the spot, but like getting to maybe 2 million would be the next milestone, which would be doubling. If it's the same energy to double as it is to 5x, then why wouldn't we just do a 5x, right? And get to like 5 million in revenue and like set the things in place. So we're finishing doing the integration, all that stuff through this final October tax deadline of the year. And then from there, thinking about like, okay, what does it take to get to that point? And then when we get there, then maybe we 5-10x it again. Who knows?
Yeah.
We decided to buy a firm. How did you find the potential deals for us to then assess?
Gotcha. Well, initially, I reached out to a mail house for accounting firms. Can I get a list of accounting firms? And are we going to reach out to them directly, maybe via direct mail or call them up or whatever, and try to go direct to the seller? But then I quickly realized that wasn't going to work. So my goal was to have an acquisition done by the end of August so that we could integrate in the back half of the year and be ready to go for the new year in 2024. Because
tax season.
Tax season, all that stuff. So you have to think about the business and the seasonality of it and how that fits in. And so I knew that I had to go to brokers. I had to go to business brokers to make that happen on that timeline. And so I did a lot of research online. I found that there are brokers out there, there are brokerage firms out there that specialize in selling accounting practices. And so I just went and searched for all of them. I reached out. A lot of them will have like an online form where you can submit an inquiry, and then they'll reach back out to you and send you the details about the business. And so I did that to a lot of them, and you start to find that there's a couple of different key players. Like in this industry, it's like Poe Advisors and then Accounting Practice Solutions. Like they covered the majority of the Southeast. And so we just really looked at all their listings, reached out, and then what they'll do is you have to sign like a confidentiality agreement, and then they'll send you over the profile of the business that gives you some general financials and other stuff about the business. And so some of them will respond to you. So you have to go and pester them to get them to actually like do their job. And so, but I gathered all information, and then you and I would look at it. Of course, I have a financial background, so I can quickly look at one of these profiles to determine if it's, going to fit or not. But I think in general, we were looking for a practice that had a good mix of business clients, since that's where we really put most of our attention.
Yeah, we were looking for heavy business clients because there's some who are basically all individual tax returns. And for me, that is, if you talk about like the future and AI and all this stuff, like the capability of like TurboTax, the software, those tax returns to me, like there's a huge risk there. But when you have business owners, I'd say this for real estate investors too, anybody who has a high income that's outside of a W-2 and has other investments and things, like there's a lot of room for strategy and, human brain. That to me is where I want to grow. So we were looking for business clients. Also, I would say from an upselling perspective, which we have not done yet. We're waiting until after the tax deadline, but, talking to some of the clients from the firm we bought and getting them into my current higher profitability tax services and CFO services, if they're a good fit, which there's definitely some in there who are a good fit for that. So we were looking for growth potential there. I also wanted a team member, at least one full-time team member, because I didn't feel like my team currently could handle a ton of additional capacity. And so I was looking at the team bonus points if we were getting another CPA. We ended up not, but it's okay. We have enough on my team now. And the market. I liked the market was something we looked for too.
Yeah. Well, we had one lady who was in Columbia, South Carolina, which is about 45 minutes from where we live. An hour and a half. Okay, an hour and a half. And so anyway, it's close by. It's within a short range here that's drivable. And she was on a boat in somewhere, the Chesapeake or something, and couldn't give us the information that we needed. And I think had she been very responsive and had everything that we need, there's a good chance we would have gone with her. But I guess she was on vacation or something, and we didn't have the information.
Didn't respond.
Yeah, didn't respond. And so that opened the window to look at this other firm down in Florida, St. Petersburg, Florida. They call it St. Pete, right next to Tampa. And then we looked at the market there, and I'm like, we literally looked at the population between Columbia, South Carolina, and then Tampa, St. Petersburg, and we're just blown away. Like St. Pete, Tampa, it's just like Charlotte. It's just booming. As we started to look at that, it became more attractive, just the market in general, where it was located. And I've said it multiple times. I think just being present there, your business is going to grow 10% a year.
Yeah.
Like just by having a Google My Business listing.
Yeah. I mean, the seller has been turning clients away unless it's a referral from one of his existing clients. Like he hasn't been taking on new business. So we definitely considered the market. I mean, my business right now, it's heavy virtual, but I do have a pretty significant proportion of clients in the Charlotte area. And then be even further beyond, just like across North Carolina, because I think some people just really like to have an accountant who's in their state at least. So, combining the online stuff, all the cloud-based systems that we have, but having, another Google My Business location whenever we get it turned on, I think is important because there's a ton of business owners down there between Tampa, St. Pete, Sarasota. Like there's a heavy concentration there. So that was a big factor. And then honestly, we were looking for profitability and an ROI, return on investment. I mean, this one, we won't share like specific numbers because I think there's some like confidentiality for the seller, but we got a steal on this business in terms of multiples. We were looking at, okay, bottom line cash flow, like what has the seller been able to take home? And we did the math. And if we changed nothing on this business, we could pay for the debt, make the debt payment, and still,
hire somebody to do the work
and still make back our down payment like double, 2 times over, like at least.
Yeah.
Because it was a combination of highly profitable and in terms of multiples in the accounting industry, pretty low. Like we got it for less than 1 times revenue. And then what was it? Less than 2 times earnings.
Yeah. Well, I think one of the factors was this was in the brokerage world, they call it a legacy firm, meaning, the seller is, in his late 70s. Everything is paper-based. A lot of these firms are transitioning to the cloud, and so they'll digitize everything. And so that makes a business less attractive, right? And so for that reason, I think it was priced a little bit lower. But one of the things I liked, like you said, was the seller. A lot of these business owners, you'll see they keep rates low and they won't raise their rates for like 10 years. And so you'll see an opportunity to go in there and raise rates. But of course, if you've got a client base that is conditioned towards those lower rates, that could be tough. But the seller in this case, even though he had a very we won't call it outdated, it works, right? It produces cash flow and it has healthy profit margins. But it, he had good cash flow because he had raised his rates over the years. And so that combination of price for the business and the cash flow it produced helped us hit all of the metrics we were looking for.
Yeah. So I think to summarize, in our case, we were looking for a specific type of client, or at least a concentration in a specific type of client. Him having the pricing be at a pretty reasonable level, at least for the tax work, was a good selling point because, we're not going to have to come in and jack up everybody's rates significantly, the market. And then in our case, we got it for a major steal because of the systems. Like, so in my case, we were okay to buy one that had those systems because I already have the systems in place. So I don't care what their systems are. Even if they had converted to the cloud, we would have gotten rid of them and put them all on my systems anyway. So I was fine to do that. I mean, it'll be a pain to get them all in there, but it's a one-time lift and then just into our systems and our processes. So, if you were looking to sell your business, if you wanted to get a better price for it, that needs to be a factor, putting in systems and processes so that somebody else can come in and easily step into your shoes, you will absolutely get a higher multiple. I mean, with the same numbers that he had, if he had better systems, I think the selling price could have been at least $100,000 more, at least.
Yeah. Well, also, you have to look at from the seller's perspective, like the timing, right? He's a CPA. I will say, so one note, the financials are very clean because it's an accounting practice. Guys, not all CPAs operate this way.
You think they would.
You think that, yeah, but they don't. But financials were very clean on the tax returns. Everything matched up. It was very consistent revenue and cash flow, which was also beneficial.
Over years.
And so, but anyway, back to the seller's circumstance, the timing, right? And the price, it goes into the pricing for the business. If he didn't sell, right? So best alternative to a negotiated agreement, the BATNA. If you've ever heard of that. Have you ever heard of that?
I've only from you.
Okay. So if you go through negotiation training, there's this thing called BATNA. So if this guy did not sell us the business, what would happen, right? Most likely, he would have to go through another tax season, which is a heavy lift for a single, like an owner-operator of a CPA firm doing all of that himself.
Who's ready to retire.
Who's ready to retire.
Yeah.
So I think that helped.
Mm-hmm. Okay, so the process was you reached out to brokers, requested basically every profile they had for all firms in the Southeast. They sent us a crap ton of profiles that showed the location, the revenue, the breakdown of the different sales buckets they had, cash flow, team costs, all of that stuff.
That's right.
We went through and picked a handful that we liked based on our criteria. We talked to 2 sellers on the phone and made an offer to this one. And you make an offer with something called an LOI or letter of intent, where you just basically, you tell me what was in it because you put it together.
Yeah, I think an LOI is, basically what you're trying to do is just get on the same page with the seller, agree to basic terms for the purchase of the business, maybe a purchase price and any other just general terms. So it could be like a 1 or 2 pager. I think in our case, we just made an offer, a price. And then I think the other thing I put on there were the dates, right? So you'll have the dates. So we want to do due diligence, and then we'll up to a certain point, and then we'll put down so much money, and then we'll do our due diligence, and then we'll go into closing by such and such date. So you kind of have that schedule in there in the document, how much you pay, what the schedule is for conducting your due diligence and closing, and then any other items. Like in this case, we got an option to purchase the building down there in Florida.
And the financing was a crucial piece that was on there, which actually was a crucial part, I think, of us getting selected, because when we talked to him, he said that he had 4 other offers, I think. Yeah. And he said that he didn't like the offers that he had because either they weren't accountants, and he said he wanted a bean counter.
That's right. He wanted a bean counter.
And so they weren't accountants, and so he wasn't sure that his clients were going to be well served going forward. And the other main reason was the other ones wanted heavy seller financing.
Yeah.
So you tell me, for people who don't know, what is seller financing?
Yeah, so seller financing is, so you'll take what they call it, like take back a note, meaning if I have let's just say a house and I own it, it's $100,000, and you come to me and say, hey, look, Brandon, I want to buy this house. I'll put down 20%, right? I'll give you $20,000, and I'll just make payments on the remainder of the 80 over a period of time.
Over 5 years.
Yeah, 5 or 10 years or whatever it is. It's common in business, like small business acquisitions, for the seller to provide some level of financing. And I think the banks also like to see some seller participation in the deal, like 5%. It just gives the bank reassurance that, the seller isn't going to just take off, that they have some skin in the game in terms of seeing it succeed. So that's just from a banking perspective. But in general, so I asked him, it's he told us about this story about how he had multiple people approach him, and, he had not accepted one of those deals at that point. And so I just asked him, what do you want? And, he just did not want to do seller financing. He wanted to cash out, basically. And he's 77. He wanted to go and retired. And so, that's the offer we made him. I think we held back about 5% in seller in terms of a contingency based on customer retention. But I think you got to look at it if put yourself in his position, right? You're in your 70s. I've got a business I built up over 30 plus years.
50 in his case.
Okay, yeah. And then this isn't a piece of property, right? This isn't something that he can go and take back. If we do, if let's just say you do seller financing and the person does a poor job, they stop paying you, you then have to
run the business into the ground.
Yeah, they'll run the business in the ground. You've got to go back and get the business. You got to go take the business back. That's your collateral. Mm-hmm. In this case, there are no hard assets. Really what it is a client list. Mm-hmm. And so it's like an Excel file. It's what you're paying, $500,000 for or whatever it is, And so if you drive that business into the ground, he has no way to make himself whole. Like that's it. And
he's taking on a lot of risk, which when you're in your 70s, and you think about retirement, you want less risk. So in his case, he wanted the cash up front. So we made an offer, and I point this out because seller financing is all the rage on Instagram. If you follow Cody Sanchez, for example, or anybody out there who talks about buying small businesses, and they're not wrong. I think seller financing can enable you to get in the door. Well, we'll talk about the bank. Maybe we should talk about how just that whole bank process, the loan process was.
Oh my gosh.
There's so many reasons to avoid the bank loan process because it was horrible, horrible, horrible. But for us to buy this business, he wouldn't have accepted seller financing unless we put a lot more down, which frankly, we just didn't have the cash to put any more down than we could have put some more down, but not anything drastic, not enough to make a difference for him. So I think understanding the seller, like you said, asking him what is it that you want?
Yeah.
And we actually lowered the purchase price from what he had listed. Probably 5%, I think.
Yeah, it was about 5%.
Less than what he had it listed for, just because we were like, hey, we'll give you all the cash now.
Yeah. Yeah, it's a higher risk when you're a buyer going in because, the seller can pack up his shit and never come back, right? And you want to call him up and he doesn't answer the phone, he or she, and you're just SOL,
Yeah.
right? So, and I said this to you before we started this, you've got to find the right seller.
Mm-hmm.
You have to have someone who wants to sell. There are a lot of people out there who own businesses and they may have their business listed, but they don't want to sell.
Mm-hmm.
Right? I know it sounds crazy.
Actually, that takes
the other
me back.
accounting firm.
No, the other one, the bike one.
Oh yeah,
there's 4 we tried to buy.
Yeah, 4. We tried to buy a bike.
This one he had it listed, but he didn't want to sell it.
Yeah, he didn't want to sell it.
His wife wanted him to sell it, so we walked away from that one before we did it was not good. Anyway, sorry.
You have to have the right seller who wants to sell the business. Number 1, and number 2. You have to align yourself with someone who really wants you to succeed. If you find someone who just wants to check and they're just going to disappear after that, it's going to be very difficult to transition those clients over.
So, especially in a client business, it might be a little different in a different industry where it's not so client heavy. And in this case, any accounting firm that we go by that's under $1 million or so, all the clients are used to working with the owner. And so you need to have somebody who's reaching out to their client saying, hey client, I'm retiring. I found this great team who's going to take over. You're in great hands, to help assure that the Excel file that you bought of client names, that they convert and, continue working with you. So I do agree. I think that's important. In other industries, it's maybe not as important unless you've got maybe team relationships, vendor relationships, but I feel like those can be managed a little bit more easily than the client transition.
Yeah. And for the service-based business, you have to like them also, right? Because you're going to have a lot of interaction with these people. And some of this stuff there may be some tension there on some of the decisions that are made, and you have to be able to handle that.
There's been tension.
So, if you're butting heads with someone who, doesn't want to listen to you, it can't communicate, can't problem solve with you, that's going to be really difficult.
Mm-hmm. And that is where we are going to pause part 1 of my conversation with Brandon. Obviously, we had a lot to say, and that's because there's a lot that goes into buying a business. So come back next week for part 2, where we will pick up this conversation, sharing what happened after our offer was officially accepted, and talking about where we are now with the business integration. Plus, we will be answering your biggest questions that you guys sent in about our business acquisition journey. So I hope you enjoyed part 1 of the conversation, and I'll see you back next week. Thanks for listening to this week's episode. Now, I want you to go take some action. What's one thing you can do this week to create more profit in your business? Send me a DM on Instagram at YoungCoCFO and share your action item with me. If you have a question or topic you'd like me to dive into, Or if you're feeling empowered about taking charge of your finances, let's continue the conversation. Go to profitandprosper.co to submit a question or topic for me to talk about on the show. And because we all profit and prosper better with friends, please leave me a review on Apple Podcasts, subscribe wherever you listen, and share the episode. Make sure you tag me at YoungCoCFO on Instagram so I can give you some love, and I'll see you in the next episode.